Hi CA students, let's revise CA Final AFM Chapter 8 Mutual Funds Practical Question 5. SBI Mutual Fund has a NAV of 8.5 at the beginning of the year. At the end of the year, NAV increases to 9.1. So there is a capital appreciation. Meanwhile, fund distributes 0.9 as dividend and 0.75 as capital gains. There are other returns, which is one is the regular income return, which is dividend, and then there is a capital gain also, realized gain. What is the funds return during the year? So as we know, one is capital appreciation, other one is income, other one is capital gain. So totaling up to 2.25 in our case, dividing it by the initial value which we have invested is 8.5 at the beginning of the year. So multiplying it with 100 will give us the return, which is nothing but 26.47 in our case. The second requirement is, had these distributions been reinvested at an average NAV of 8.75, assuming 200 units were purchased originally, what is the return? As we have seen in our previous problems, the capital appreciation is an unrealized gain, so which we have not received in our account, either let it be a trading account or a bank account. Meanwhile, the distribution as dividend and capital gain we will receive in our account. So that much money we have got, so that much only we can reinvest also. So in this case, 0.9 plus 0.75 will be the amount we got, which is 1.65. Now this 1.65 multiplied by 200, so the 200 units, so overall we got 330 rupees. Now they have told reinvestment at the rate of average NAV, which is 8.75. So 330 divided by 8.75 will give us how many additional units we can buy with the money available. Now 337.7571 is the units, additional units. So adding this to our existing mutual funds, which will come up to 237.71 units. Now the value of this 237.71 is NAV at the year end increases to 9.1 they told. So multiplied by 9.1 will give us 2163.16. Now this 2163.16 is the money at the end of the NAV, and during the year we have not got anything because we have reinvested everything in the mutual funds again. So the initial value will be 200 multiplied by 8.5, correct? So 200 multiplied by 8.5, which is nothing but 1700. So the return which we got is 463.16, which is nothing but the unrealized capital gain. So the return 463.16 divided by 1700 will give us the return which we got, which is unrealized yet, because whatever we received we again reinvested in the business. We have not realized anything yet now, but the unrealized gain, the return is 27.24 in our case. Thank you.